Hey, good evening, good day, or morning. All right, I'm looking at US dollar, Canadian dollar. I am on a 15-minute chart. I'm going over a trade that I took earlier today, and I basically look for this consolidated zone. I had a box drawn here, and I'm going to show you how I got my targets. All right, measured. Basically, it's a pole flag pattern, right? Set it in the middle. Boom, targets here. All right, they were hit, but I'm going to also go back and do a replay so you can see. All right, this is what I saw, and I typically like to use my Fibonacci extension tool. Bring it there. All right, and so this was a target up here for me, and we'll just go ahead and take it from here all the way over. All right, and then we could take this off. And this is what I played today. I think it was around 30 something pips. Get up in here, about 43 from there. Yep, targets hit. All right, so this is the only forex trade I took for the day. So this is pretty good. All right, so currently right now, price is in a recent supply zone. We're gonna go up to the 4-hour chart to get a better glimpse of this. Let's clear all this off. All right. All right, so we want to really be aware of this pattern that's showing up right now. Let's see. We got this, and then we got this going on right now. All right, so we're on 4-hour chart. There's two ways people could trade this. They can look for going for a short, because right now we're at a recent area of resistance where this area has shown that price likes to sell off in this particular area. So you could see some short sellers try to come in and start shorting the market there. We could go ahead and look at that sentiment as well too. We got 60% that are long right now, and we got 40% that are short. So we want to keep an eye on that. So we need to be careful of longs trying to come into the market, thinking it's going to push up. It could get wiped out. This could be considered a bear flag as well too. All right, we use this as a flag pole. All right, we got a flag pattern that's showing up. All right, and so this is potentially what could be the downside targets based off of this. And like I told you before, I like to use my Fibonacci extension tool. Go ahead and get those targets. And these are the downside targets, so where price could come to based off of what we have seen. And it lines up with the same measurement if you just use a trend line. So this is a potential for that. Now, you also want to do your scenarios as if it does go and pop to the upside. All right. So we want to look at, we've crossed this 23%, and we've come back below one, all right, two times. Okay. If we do pop, we know that this area is a key area price can come. So we will be looking for this particular zone. If it does decide to come up, there could be some trading opportunities there that we'll look for. So if we do get that, this pop, it's about 49, maybe 60 something plus pips to get there. But right now, my bias would somewhat be to the downside until we get some area where we can break above this resistance and close above. And then we make it fight up to these next little levels for the most part. So get in the habit of doing two analysis. You want to do a long and short bias setup. So you're just not committed 100% to just one direction. So you'll be able to pivot if you needed to. All right, prices back in a Euro USD. All right, this was a demand zone. Okay, prices come into this zone. We need to see if we're going to do anything on this. We want to see. All right, I want to see. I want to be patient. I want to see this. I want to see price get above there and close above there before I even consider anything. All right, these are the landmarks you're going to have to worry about. You have to respect this area. Let's price turn around here. All right, then your next area will be this. Right, so you saw that this was an area of support coming into the market. All right, let's look at this. When this price came down here, it's a demand zone. All right. And then finally we closed above here. So if we went back in the time, you would have seen something like this, where if we was trading it based off of this, what do we want to see? I want to see this area. I want to see price come above here. So we would have had this, and this was when you would be looking to take the trade when price gets above here. So let's see what happens. All right. So we got getting good on this move here. Somebody possibly could have got faked out here and got in. But remember, we want to put our stop loss above the candle, um, below this candle that made the actual support level. All right, and then we get this engulfing. But you also could put your stop loss above the candle. I mean, below the candle that was engulfed as well too. So there's two ways you can do it. You can do it based off the structure area or the immediate candle. So it depends on, if you're really conservative, you want to put it down here. If you're aggressive, you want to put it here. All right, and then you got your retest traders. It's like they got an opportunity to get back in. Like they get another one. All right, where we get out at, you look left. These are area market structure. All right, but you also want to look at this. All right, it was hiding behind it, right? So sometimes you would have something like that. As you're taking this price, you're moving up. You look left. This is so we call this a wall. All right. So you got a wall that's blocking your view if you look left. So a lot of people negate these other candle action or market structure behind the candle. That's still legit. All right. So it's two ways you could have took it here, got out here, or look to get out here on this wick, which you see here. So find an entry again. Now that's pretty good. To the top is 92, 94 pips. We never would have probably held it that long up there, but this was the best idea for me. It's around 52 pips that have been out. But I'm just showing you how behind a candle, like this big candle here, behind it, you see that you have some candles that are being blocked. A lot of people don't actually consider those as potential supply and demand areas. So once again, we want to see price engulf and get above our next target area. We want to get out here, right? If we can clear and close above here, then our next target will be up here. And that's what we'll be looking for. But as of right now, I wouldn't just jump into the trade. Right, I need to see it doing something. So it's working on the patience. Now, what is the scenario for a bearish scenario? Right. So we have this. Right. So if we continue to break, if we can clear this area, we will be deeper into this box, and this 1.272 will be the first area where we would get out. I don't know if we're running out of real estate right now. If we're looking to go short, so it's not really much. It's 25, 27 pips. Now, if we go deeper to the next zone, we're talking about 118 pip. So that possibly could be in the works as well too. This is a key area. It's lining up. This is confluence. This is what we want. This zone right here. This is a what demand zone, and the Fibonacci lined up perfectly within that zone. So now we have both of our potential upside targets. All right. So if we break close above here, we're gonna get out here, and then we got this target, and this is the final of that particular move. So right now it's just really a being patient game. All right. All right. Look what happened. All right. Remember, this is what demand zone. Look how price what it's reacting. So react to this zone. All right. What we want to do now in real time. We want to see price close above there. Of course, you got to keep an eye on this. So this is what happened when people be like, "Oh well, we got a free run for price just to get back up here because it's a nice smooth bar. Sometimes we call it clean traffic." The problem is, if you look on the backside, you could have some stop signs right there. Now, let me go on the chart and actually find one for you guys so you can actually see what I'm talking about. All right, look at this right here. So you see we have a support level right here, right? All right, so we get up here. People think, oh, this is clean traffic. We should be able to take the trade up here. All right, most people look at this and be like, oh yeah, that's a supply zone. It drops from here. We're coming back to retest, but also it's because this was already considered a key area. All right, that it broke and now it's retesting. So it's really this is the original of the move that's being retested, and not so much that. All right, so some people can get confused. They look back and say, "Oh, it's here." I say, "Well, look on the other side. What's going on? You have that. You have these multiple candles hanging out in that area to make that more reality." Um, Here's another thing too. So you see this right here, right? You see this move. You look left. Once again, we want to look at what behind this wall. What's going on behind the wall? All right. So you see, these candles are considered a wall, and they can be blocking. But I want you to look at this little candle right here. All right. It found some support at one point right there. All right. And when it did, it pressed up. All right. And then we finally got a drop. All right. Now when we rally up, you see, we back in this key area. But if you took these other candles away, or if you didn't really pay attention to them, you would just be focusing on this particular candle. And this is why sometimes people are like, why did it just turn around right here, right? Why did it choose, to turn here and not up here? It's because you gotta look behind the wall. Okay, always remember that. Now let's see what one would look like if we was going short. All right, you see these? All right, these support levels. Okay, price was pushed. All right, if we were selling to come back down, all right, you think that you can get back here, but then price turns here, here. So it's three times price turns in this area. But if you look behind this wall, this green wall, what do you see? A lot of candles that was respecting this area. So this is a key area where some orders are being picked up. So a lot of buy orders in this area, and it's coming back and it's collecting. So that's what you want to be able to do. Once again, if you're shorting, you want to be able to look and see what's behind the wall as well too. So you just take a little practice, just being on the chart, being able to see those things, because a lot of times we don't pay attention to those key areas. Even here, look, we broke, but this was what's what. Look at this, boom, 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 and what happened? We break, then we came back, retest. But if you didn't pay attention, you say, "Oh well, why did price just turn around right here?" I mean, we got some nice clean traffic. We got this level right there. You got that level. But why here? Sometimes you really got to go back and you got to look, see how important some of these other levels were and how price reacted to it. All right, so these are key areas where you see this price is reacting to it. All right, so that was a great place for some reason for the bigger boys, right? And I said for some reason, but I know the reason, which is liquidity, right? And do a couple more. So Euro JPY, and this is all on the 4 hour chart. I think the 4 hour chart is real good for. All right, so I already had these drawn up. But see how price reacted, did pretty well. All right, we broke above. Boom. So you see how I got my supply zones and demand zones already in place. All right, so if we was back in the real market, all right, I'm not just gonna jump in just because it comes down to a supply and demand zone. I'm gonna do whatever the candidate enters into that particular zone. I want to see something engulf, and we finally get this. All right, stop loss go below the counter that was engulfed, or you can take it and look at market structure, and you can put it below this particular structure. The more you do that, the more you're probably going to run the risk of having a large stop loss. So you see, that's huge. It's almost 104 pips. So if you're going to take that particular trade, you definitely need to make sure your lot size is in line with your risk reward and your risk management. But this was pretty good. Once again, uh, there's different ways we're looking. That would have been a target area to get out of based off of that. It's another secondary target. So, yep. All right, that's it. Just doing a little soft review. Hit the like button, subscribe. Make sure y'all continue to marking up your charts. Try to do 5 a day. Find different assets, commodities, forex, crypto, stocks, indices, ETFs, whatever. Just start marking up your supply and demand zones, um, and just rep that over and over, and then you'll start being able to see how these prices are reacting to these key levels. All right, that's it. It's my time. I'm out.